You are sitting at your computer late at night. You have been saving your credit card points for 2 years. You remember seeing a business class seat to Tokyo for 60,000 points just a few months ago. You have finally hit that number. You log in, you search the exact same route, and you see that the price is now 180,000 points. The seat is still there. The plane is the same, your points are the same, but your buying power has vanished. This is a situation that millions of travelers are facing right now. It feels like you are running a race where the finish line moves 5 feet back for every 4 feet you run. You might think you did something wrong or that you missed a specific window, but the truth is more structural. In the past, you could look at a chart and know exactly what a point was worth. Today, that certainty is gone. We are seeing a shift where the people who issue the points, like banks and airlines, are changing the rules in real time. They are using software to adjust prices based on how many points are sitting in everyone's accounts. If everyone has more points, the points become worth less. It is a simple supply and demand problem, but it is happening inside a system that you do not control. You are earning a currency that can be devalued by the person who gave it to you without any warning. We used to call this travel hacking because you could find a gap in the rules and use it to get a high value. But the gaps are being closed by algorithms. This constant change creates a lot of stress for the average person who just wants to take a nice vacation. You feel like you have to be an expert just to get a basic reward. You have to check 5 different websites and use 3 different calculators just to make sure you are not getting a bad deal. This is not how it used to be. The system was designed to be a loyalty program to thank you for your business. Now, it often feels like a game of cat and mouse. In this first part of our discussion, I want you to realize that your frustration is not a personal failure. It is a logical reaction to a system that has become more complex on purpose. When things get more complex, the advantage usually shifts away from the individual and toward the institution. We are going to look at why this is happening and what the actual numbers look like. By the end of this, you will understand how to look at your points like a professional and stop feeling like you are always one step behind. We are going to break down the mechanics of this shift so you can decide how much of your time and money you actually want to put into this game. It is a game that can still be won, but the old strategy guide does not work anymore. You need to understand the new logic of the system to get the value you deserve. To understand why your points are losing value, we have to look at how a bank or an airline actually views them. To you, a point is a promise of a future vacation. To a bank, every point they issue is a debt that they owe. This is called a liability on their balance sheet. If a bank has issued 1 billion points and each point is worth 1 cent, that bank has a $10 million debt hanging over its head. This is the core of the systemic tension. The company wants to minimize that debt while still making you feel like you are being rewarded. In the old days, companies used fixed charts. You knew that a flight from New York to London would cost exactly 60,000 points. This made the debt predictable for the bank and the goal clear for you. But as the volume of points in the world grew, these fixed promises became dangerous for the companies. If the cash price of a ticket went up to $5,000, but they were still forced to give it to you for 60,000 points, they would lose a lot of money on that transaction. To solve this, they moved toward what we call dynamic pricing. This is where the cost in points fluctuates just like the cash price does. But there is a hidden layer to this shift that most people miss. When a bank controls the currency and the store where you spend it, they can change the exchange rate whenever they want. Imagine if you worked for a company that paid you in company tokens. If you saved up enough tokens to buy a car, but the company suddenly decided that cars now cost double the tokens, you would feel cheated. This is exactly what happens when an airline devalues its award chart without notice. They are effectively reducing their debt by making your points less powerful, They do this because they need to manage their financial risk. If a bank has too many points outstanding, it looks bad to their investors. By raising the point prices for flights, they can wipe millions of dollars of liability off their books without spending a single cent of actual cash. This is a very efficient way for them to manage their profit margins. You also have to consider how banks make money from these points. They sell the points to the airlines. When you use a co-branded credit card to buy groceries, the bank pays the airline a small fraction of a cent for every point they give you. The bank makes money on the transaction fees and the interest you pay. The airline makes money by selling the points to the bank. The only person whose value is not guaranteed in this triangle is you. You are the holder of the currency that is designed to lose value over time. In a systemic sense, the house is always moving the goalposts to ensure the total cost of the rewards program never exceeds a specific percentage of their revenue. If too many people start getting high value out of their points, the system identifies that as a leak. To plug the leak, the system increases the cost of the most popular rewards. This is why business class seats are the first thing to get more expensive in points. They are the most expensive for the airline to give away. By understanding that your points are a liability that a bank is trying to manage, you can start to see why the tricks that worked 3 years ago are failing now. The system is designed to protect the bank's bottom line, not your travel dreams. Knowing this is the first step toward building a strategy that actually works in the current environment. You have to stop thinking like a loyal customer and start thinking like a person managing a volatile asset. If you hold onto points for too long, you are guaranteed to lose. The system is built to reward immediate action and punish long-term saving. This is a fundamental change in how rewards work. In the next section, we will look at the history of how we got here and how the simple frequent flyer mile turned into a complex global financial product. To truly understand why the game feels rigged today, we have to look back at where it started. In 1981, American Airlines launched the first modern frequent flyer program. At that time, it was a very simple concept. If you flew 1 mile, you earned 1 mile. If you flew 20,000 miles, you got a free ticket. It was a physical reward for physical behavior. The airline wanted to keep you from switching to a competitor, and the reward was a byproduct of your travel. For many years, this was the standard. You could look at a printed piece of paper called an award chart and see that a trip to Hawaii cost 35,000 miles. That number stayed the same for years at a time. This gave travelers a sense of long-term value. You could save for 5 years and know exactly what you would get at the end. But in the late 1980s and early 1990s, something shifted. The airlines realized that they were sitting on a gold mine that had nothing to do with flying. They realized that banks were willing to pay real money for those miles. This changed the fundamental nature of the program. It was no longer just about loyalty, it became a business of selling currency. Once the banks got involved, the number of miles in circulation exploded. In the early days, you only got miles if you actually sat in a seat on a plane. Now you can get 100,000 miles just by opening a credit card and buying a new refrigerator. This created a massive historical imbalance. When the system started, the number of miles was limited by the number of seats on the planes. Today, the number of points is limited only by how much people spend on their credit cards. This led to the first major wave of point inflation. When everyone has 1 million points, a 60,000-point flight becomes a problem for the airline. They cannot give away every seat for free. Historically, airlines dealt with this by slowly raising the prices every few years. But in the last decade, technology allowed them to move away from fixed charts entirely. They shifted to dynamic pricing because they could finally track demand in real second intervals. We went from a world of predictable physical loyalty to a world of digital financial speculation. You are no longer just a traveler earning a perk. You are a participant in a global market where the supply of points grows every single day. If you look at the history, the programs that were the most generous 20 years ago are often the ones that have devalued the most today. They had issued so much currency that they were at risk of going bankrupt from their own rewards. This transition from miles to points is a key distinction. Miles were based on distance. Points are based on dollars. This historical pivot shifted the advantage away from the person who travels a lot and toward the person who spends a lot. It also allowed companies to decouple the reward from the actual cost of the service. In 1990, a free flight was a simple exchange. In 2026, a free flight is a complex calculation of airline partners, fuel surcharges, and algorithmic availability. Understanding this history helps you see that the current difficulty is not a glitch. It is the natural result of turning a loyalty perk into a massive multi-billion-dollar financial industry. The system has evolved from a thank you note into a profit center. When you realize that the primary customer for an airline's points is now a bank and not you, the traveler, the decisions they make start to make perfect sense. They are optimizing for the partner who buys the points in bulk. Your role as the end user has changed from being the focus of the program to being the person who clears the debt off the books. By looking at this history, we can see that the era of the fixed award chart was actually the exception, not the rule. We are now in a permanent state of flux where the value of what you hold is constantly being adjusted to protect the financial stability of the issuer. This is why you cannot use 20-year-old strategies to solve a modern problem. The world of 1981 is gone, and the rules of the game have been rewritten by computers that do not care about your loyalty. Now that we have looked at the history, we need to connect the dots between the massive bonuses you see on billboards and the increasing cost of your flights. This is the part of the system where the math really starts to matter. Let us look at a typical scenario. You see an advertisement for a new credit card that offers 100,000 points if you spend $4,000 in 3 months. To most people, 100,000 points sounds like a huge amount. It sounds like enough for several trips. But we have to look at the total pool of points in the world. When a bank gives out 100,000 points to 1 million new customers, they have just added 100 billion points to the system. This is where the integration of banking and travel creates a problem for you. The airline only has a certain number of seats. If the supply of points grows by 10% every year, but the number of planes stays the same, the value of each point must go down. It is exactly like what happens when a government prints too much money. This is why you see the price of a business class seat jump from 80,000 points to 150,000 points. The airline is reacting to the fact that there are too many points chasing too few seats. You might feel like you are winning when you get that big sign-up bonus. But you are actually participating in the very process that devalues your existing balance. Think of it like a bucket with a small hole in the bottom. You are pouring in points from your spending and your bonuses, but the system is slowly leaking value through inflation. If you do not spend those points faster than the hole is leaking, you end up with less than you started with. This is the primary reason why holding onto points is a bad financial move. In a normal savings account, you expect to earn interest. In a points account, you are effectively paying a hidden tax through devaluation. We can see this in the numbers. 5 years ago, a round-trip ticket to Europe in economy class might have cost 60,000 points. Today, that same ticket often costs 80,000 points or more. That is a 33% increase in price. Very few people are earning points 33% faster than they were 5 years ago. This means that even if you are doing everything right, you are likely falling behind. The banks and airlines have integrated their systems so tightly that they can adjust these values almost instantly. When the bank sees that its customers have a collective balance that is too high, They can work with the airline to offer a limited time transfer bonus. This looks like a great deal, but it is often a way to get you to spend your points so the bank can remove that debt from their books. They are incentivized to keep you moving through the system. They want you to earn and burn. The problem occurs when you try to save for a dream trip that is 2 or 3 years away. By the time you get there, the price has moved. You are not just fighting the cost of the ticket. You are fighting the collective spending power of every other person who also got that 100,000-point bonus. The system is now a massive competition. Every time a new high-value credit card is released, the clock starts ticking on the next round of devaluations. This is the cycle of the modern rewards ecosystem. Understanding this connection is vital. You cannot look at a sign-up bonus in a vacuum. You have to look at it as part of a larger machine that is constantly recalibrating itself. The goal of the issuer is to keep you engaged in spending while keeping their own costs predictable. Your goal must be to extract value as quickly as possible before the math of the system catches up to you. We have seen how the history led us here and how the banks manage their debt. Now you can see how those two things combine to create the inflation you feel every time you search for a flight. You are not just a customer. You are a small player in a very large financial market. The more points that are created, the harder you have to work to find the deals that still offer real value. This integration of credit and travel has made free luxury harder to find because the luxury itself is a fixed resource while the points are an infinite one. Let us take a breath and look at how this actually feels in your daily life. Imagine you are standing in line at a coffee shop. You pull out your premium credit card to pay for a $5 latte. You know that this specific card gives you 3 points for every dollar spent on dining. In your head, you do a quick calculation. That latte just earned you 15 points. You feel a small sense of satisfaction. You are making progress toward that big trip. This is a very common feeling. It is the feeling of winning a small game every time you spend money. But let us look at the reality of those 15 points. If your goal is a business class seat to Europe that now costs 150,000 points, you would need to buy 10,000 lattes to get there. That is $50,000 spent on coffee. When you see the number in that context, the excitement starts to fade. The problem is that our brains are not very good at processing these large differences in scale. We feel the same hit of dopamine for earning 15 points as we do for earning 1,500 points, even though one is 100 times more valuable. This is exactly what the credit card companies want you to feel. They want the act of earning to feel good regardless of the actual value. Consider the case of a person we will call Sarah. Sarah is very careful with her spending. She uses different cards for groceries, gas, and restaurants to maximize her points. Over 1 year, she spends $30,000 and earns 60,000 points. She feels like she has worked hard for this. She feels like she has earned a free flight. But when she goes to book, she finds out that the 60,000 points only covers the cost of a domestic flight that would have been $400 if she paid cash. When you divide $400 by 60,000 points, you see that each point is only worth about 0.6 cents. Sarah is confused because she read online that points are worth 2 cents each. This gap between expectation and reality is where most people lose interest. They feel like they have been lied to, but the math was always there. The 2-cent valuation usually only applies to high-end international flights, which are the hardest to book. For everyday spending, the value is much lower. This is why it is so important to stay grounded in real numbers. If you are spending thousands of extra dollars just to earn points, you might be losing money. If you carry a balance on your card and pay 20% interest, the value of your points is completely wiped out in a single month. No reward is worth paying credit card interest. It is a simple mathematical fact. Yet, many people focus so much on the points that they lose sight of their actual bank balance. They are playing the game on the bank's terms. To fix this, You have to start looking at your points as a small discount rather than a path to wealth. If you get 2% back on your groceries, that is great. It is better than nothing, but it is not a life-changing event. When you stop chasing the high of the earn, you can start making more rational decisions. You can decide if a card with a $900 annual fee actually makes sense for your lifestyle. For some people, it does. For most people, it does not. The relief comes when you realize you do not have to be perfect. You do not have to maximize every single cent to get value. You just need to be aware of the trade-offs. If searching for a flight for 10 hours saves you 50,000 points, you have to ask yourself what your time is worth. If you value your time at $50 an hour, you just spent $500 worth of time to save about $500 worth of points. You broke even. This is the reality of the personal side of points. It is a hobby that can provide value, but it can also become a second job that does not pay well. By understanding this, you can lower your stress. You can enjoy the rewards you do get without feeling like you are constantly failing at a complicated system. You now understand that the small wins at the coffee shop are mostly psychological. Now we need to look at how this game has changed because everyone is playing it at the same time. 10 years ago, the tricks we are talking about were hidden in small corners of the internet. You had to read technical forums and understand complex rules to get a good deal. Today, there are thousands of social media accounts telling everyone exactly which card to get and which flight to book. This is the societal layer of the problem. When a piece of information that used to be a secret becomes common knowledge, the value of that information drops to zero. We are seeing a massive crowding effect in the travel industry. Let us look at the math of a typical airplane. A long-haul jet might have 300 seats. Out of those 300, only about 30 are business class. The airline usually only releases 2 or 3 of those 30 seats for people using points. In the past, maybe 10 people were competing for those 2 seats. Today, because of the internet and mass marketing, you have 10,000 people competing for those same 2 seats. This is why you can never find availability even though you have the points. The supply of luxury is fixed by the physical size of the airplane, but the number of people who can afford it with points has grown 1,000 times over. This creates a social environment where everyone is constantly frustrated. You see people on your screen taking amazing trips, and you wonder why you cannot do the same. The reality is that for every person you see in a first-class seat, there are 10,000 others who tried to book it and failed. This crowding has a secondary effect on the economy of travel. Airlines have realized that they no longer need to offer good deals to fill their seats. If a seat is empty, they know a point hacker will grab it within seconds. This has allowed them to stop competing on price and start competing on scarcity. They are intentionally keeping the number of award seats low to drive up the value of the cash seats. They know that if you are desperate for that trip to Paris and you cannot find it with points, you might eventually give up and just pay $3,000 in cash. This is a win for the airline. They got you to earn the points which they were paid for by the bank, and then they got you to pay cash for the seat anyway. This societal shift has turned travel from a service into a high-stakes competition. It has also changed how we behave as consumers. People are now choosing where to eat, what to buy, and even where to live based on how many points they can earn. We have moved from a society that uses money to buy things to a society that uses debt to earn tokens. This has real consequences for how travel costs are structured. As more people use points to book the few available seats, the cash prices for the remaining seats go up. This means that people who do not play the points game are effectively subsidizing the travel of those who do. But even the people who play the game are starting to lose because the effort required to win is becoming too high. We are seeing the rise of professional booking services. These are companies you pay to find the flights for you. This is a clear sign that the system is broken for the average person. When you have to hire a professional to use the rewards you were promised, the reward is no longer a perk. It is a burden. This crowding effect is permanent. The internet is not going away, and the number of people with premium credit cards is only going to grow. We have to accept that the era of easy high-value redemptions is over because too many people are at the table. This is why you feel like you are working harder for less. You are competing with a global population that has the same information and the same tools as you. To succeed in this environment, you have to look for the things that other people are ignoring. You have to look at the secondary cities and the less popular airlines. If you try to go where everyone else is going, you will almost always find a door that is locked. Understanding this societal pressure helps you realize that the system is not broken just for you. It is overwhelmed by its own success. In the next section, we will look at the technical side of this and how the banks are shifting their focus from the savvy hacker to the high-spending user. Let us look at a technical shift that is changing who actually wins in the rewards game. For a long time, the system favored the person who was good at math and willing to spend hours researching rules. We called this person the savvy hacker. But banks have noticed this behavior. They have seen that the hacker is a high-cost customer who extracts a lot of value while paying very little in interest or fees. To fix this, the system is moving toward a revenue-based model. This means that the rewards are no longer based on what you know, but on exactly how much money you spend. We can see this in how airlines award status and how banks approve credit limits. In the past, you could reach the top tier of a frequent flyer program just by flying a lot of miles on cheap tickets. Now, you almost always have to spend a specific amount of cash, such as $15,000 or $20,000, to get those same benefits. The bank is doing the same thing with its algorithms. They are using your transaction data to identify who is a profitable customer and who is just gaming the system. If the system sees that you only spend money in categories that give high rewards, and that you pay off your balance every single month without fail, you might find it harder to get approved for new cards. You might also see your credit limit stay low. This is because the bank is looking for the high spender who is less sensitive to the rules. They want the person who spends $100,000 a year on a card and does not care if they get 1 cent or 2 cents per point. To the bank, that person is a much better customer than the person who spends $10,000 but insists on getting 10 cents per point. This shift is built into the software. When you search for a flight using points, the airline might show different prices to different people. A person with a high balance of points and a history of expensive cash purchases might see a lower price than a person who only ever uses points. This is called dynamic personalization. It is a way for the system to reward the most profitable users while making it harder for the people who are just looking for a deal. We are also seeing a change in how points are earned. More and more cards are moving away from fixed categories like gas or groceries. Instead, they are offering a flat rate on everything or a high rate only on travel booked through their own portal. When you book through a bank portal, the bank takes a commission from the airline or the hotel. This allows them to pay for your points using the money they just made from your booking. It is a closed-loop system that guarantees the bank a profit. The savvy hacker hates portals because they often have worse cancellation policies and less flexibility, but the bank does not care about the hacker. They are optimizing for the busy professional who wants a simple one-click solution. This technical evolution is effectively pricing the hacker out of the market. The amount of time you have to spend to find a workaround is increasing, while the financial reward for doing so is decreasing. The system is being tuned to favor raw spending power over strategic intelligence. If you spend $500,000 a year, you do not need to know any tricks. The red carpet is rolled out for you automatically. If you spend $20,000 a year, no amount of cleverness will give you the same level of service. This is a cold reality of how the systemic math has evolved. The house has moved from a world of manual oversight to a world of algorithmic enforcement. The computer knows exactly how much you are worth to the company, and it adjusts your experience accordingly. This means that if you want to keep winning, you have to decide if you are willing to spend more money or if you are willing to accept lower returns. The middle ground where you could spend a little and get a lot is disappearing. It is being replaced by a tiered system where your value as a human is reduced to a single profitability score in a database. Understanding this shift is vital because it explains why the old tricks feel like they are hitting a wall. You are not fighting a person. You are fighting a mathematical model that has been programmed to prioritize revenue above all else. Now that we have covered the history and the math and the way banks manage their debt, we need to bring this down to your actual wallet. We have established that the system is designed to favor the house. We know that inflation is constant. We know that everyone is competing for the same few seats. So, what do you actually do with this information today? The most important change you can make is to adopt a strategy of earning and burning. In the past, you might have felt proud of a $500,000 balance in your account. You looked at that number and felt rich. But based on everything we have discussed, you now understand that a large point balance is actually a liability for you. It is a currency that is losing value every single day. If you have 200,000 points sitting in an account for 2 years, and the price of your target flight goes from 60,000 to 80,000, you just lost 25% of your buying power without doing anything. You must treat points like a hot potato. You should have a specific trip in mind before you even start earning the points for it. Once you have enough, you book it immediately. Do not wait for a better deal or a better time of year. The risk of devaluation is almost always higher than the potential gain of waiting. This is a fundamental shift in mindset. You are moving from a saver to a spender. Another key part of this integration is diversifying where your points live. You should focus on transferable points rather than points tied to one specific airline or hotel. If you have 100,000 points with one airline and they decide to double their prices tomorrow, you are stuck. But if you have those points in a bank program that can transfer to 10 different airlines, you have protected yourself. You can just pivot to a different partner that still has good value. This is how you reclaim some of the power that the institutions have taken. You also need to stop chasing every single bonus you see. Every new card you open has an opportunity cost. It affects your credit score and your ability to get other cards later. You should only open a card if the bonus directly helps you reach a goal you already have. If you get 100,000 points for an airline you never fly, those points are worthless to you. They are just numbers on a screen. You also have to be honest about the fees. If you are paying $500 a year for a card, but only getting $300 of real value, you are losing $200 a year to feel like a VIP. That is not a reward. That is an expensive subscription. The successful user in 2026 is the one who is surgical and fast. They know exactly what their points are worth in cash. If a flight costs $500 or 50,000 points, they pay the $500 cash and save the points for a better deal. They do not use points just for the sake of using points. They use them when the math clearly favors them. By integrating your knowledge of how the system works with your daily spending habits, you can stop feeling like a victim of the algorithms. You accept that you cannot control the price, but you can control how much of your own wealth you keep in their system. You are looking for the exit at all times. You earn the points, you book the flight, and you clear the balance. This keeps you lean and allows you to adapt when the next devaluation hits. You are no longer trying to outsmart a billion-dollar bank. You are just making sure you are not the one left holding the bag when the rules change again. This is the only way to maintain your mastery as the system evolves. Looking toward the future, we have to recognize that the very definition of a travel reward is changing for our entire society. For the last 40 years, the promise was simple. If you participated in the system, you would eventually get a high-end experience for free. But as we move further into this decade, we are seeing that promise being replaced by a tiered reality. The future of these programs is not about giving away free seats. It is about dynamic discounting. We are moving toward a world where your points act more like a coupon than a separate currency. You can see this in how airlines are increasingly offering the option to pay with a mix of points and cash. They do this because it allows them to peg the value of your points to a fixed number, like 1 cent per point. This removes the possibility of you getting 10 cents of value for a business class seat. From a societal standpoint, this means that the dream of the free first-class vacation is becoming a luxury that is only available to the ultra-high spenders. For everyone else, the reward system is becoming a way to simply offset the rising cost of travel. This is a significant shift in how we think about consumer benefits. In the past, rewards were a way for the average person to access experiences they could not otherwise afford. In the future, rewards will likely be used just to keep travel affordable at a basic level. We also have to consider the role of artificial intelligence in this evolution. Airlines and banks are now using models that can predict your behavior before you even make a search. They know if you are likely to pay cash or if you are only looking for a points deal. This allows them to hide the best deals from the people who are most likely to use them. They are creating a personalized economy where two people sitting next to each other on a plane might have paid completely different prices in points based on their spending history. This level of data control is unprecedented. It means that the individual mastery we have discussed is being met with institutional mastery that is far more powerful. As a society, we are moving away from a world of shared rules and toward a world of individualized pricing. This makes it very hard to give general advice because what works for one person might be invisible to another. We are also seeing a consolidation of power. A few large banks now control the majority of the points market. This gives them the power to dictate terms to airlines and hotels. If a bank decides to stop partnering with an airline, that airline could lose a huge portion of its revenue. This means the banks are the ones actually designing your travel experiences. They are deciding which routes are available and how much they cost. This shift from travel companies to financial institutions is nearly complete. The societal cost is a loss of transparency. When the rules of the game are hidden inside a private algorithm, you can never be sure if you are getting a fair deal. You are forced to trust a system that is programmed to extract the maximum amount of profit from you. This is why it feels harder to get ahead. The system is finally doing what it was always intended to do. It is creating a sustainable financial product that rewards the issuer more than the user. We have to stop waiting for the old rules to come back. They are not coming back because the technology that replaced them is too efficient. The future of points is one of constant flux and hidden math. To survive in it, you must lower your expectations of the big win and focus on the practical gain. We are entering an era of marginal benefits rather than jackpot rewards. This might sound discouraging, but it is actually a form of freedom. When you stop chasing a phantom promise of free luxury, you can start using the system for what it actually is. A tool for managed discounts in an increasingly expensive world. We have looked at the history of miles. We have looked at how banks manage their debt and how algorithms are changing the prices you see on your screen. Now, we need to bring all of this home to the actual decisions you make every day. The final step in mastering this system is to stop viewing it as a separate part of your life and to start seeing it as a simple calculation of your time and money. You now understand that a point is a decaying currency. You know that the institutions are optimizing for their own profit, and that the crowd is making it harder to find traditional value. So, your final protocol is to simplify. Take a look at your wall at right now. You probably have 2 or 3 cards that you use for everything. For each one of those cards, you should be able to state exactly why it is there in one sentence. If you cannot do that, you are probably paying for a benefit you are not using. Let us go back to a real number example to anchor this. If you spend $20,000 a year and earn 2 points per dollar, you have 40,000 points. If those points are worth 1 cent each, you have $400. If the annual fee for that card is $95, your actual profit is $305. That is the number that matters. Not the dream of a first-class seat, but the $305 of actual buying power. When you see the numbers this clearly, the system loses its power to stress you out. You can decide if the effort of tracking categories and checking transfer partners is worth $300 of your time. For many people, the answer is to move to a simple 2% cash back card. This removes the inflation risk entirely. It removes the search for availability. It gives you real money that you can use anywhere, including on airlines that do not have rewards programs. If you do choose to stay in the points game, you must do so with your eyes open. You must accept that you are a small participant in a massive systemic machine. You will earn your points quickly. You will spend them immediately, and you will never hold a balance long enough for the bank to devalue it. You are no longer trying to hack the system. You are just using it as an efficient tool. I want you to imagine yourself on your next trip. You are not thinking about the 20 hours you spent on travel blogs. You are not thinking about the transfer bonus you missed by 2 days. You are just sitting in your seat, whether it is in the front of the plane or the back, knowing that you paid a price you were comfortable with. You have used the system rather than letting the system use you. This is the ultimate goal of being a point hacker in the modern era. It is not about getting something for free. It is about having the clarity to know what a deal is actually worth to you. Look down at the credit card in your hand. It is just a small piece of plastic or metal with a tiny electronic chip on the left side. That chip is a gateway to a massive global network of banks and airlines. But at the end of the day, it is just a tool for your personal finance. Use it to simplify your life, not to complicate it. You have the knowledge now to see through the hype and the large numbers. You can make your own choices based on your own math. That is the most valuable perk any program can offer you.